Yeah, hi Divyansh, can you hear us?
Yes, I can.
Perfect.
Uh, can
So,
what can you see on the screen right now?
mm,
Is it the
budding,
PPT?
yeah, it's the PPT. So I'm talking about the Zoom screen, not the YouTube screen.
Right, the same. Just
Yeah,
hold
on the
on.
Zoom screen, we can see the cover page of PPT.
Okay.
Recording in progress.
Right. So, hi Divyansh, hi Tanya. So we are live on YouTube right now. So,
Hello, Puneet. How are you?
hi Divyansh. I'm good. So let's start. Tanya, would you like to take the
Mhm.
slides?
Yeah, can you see if people have joined or not? Or
Yeah, we
else we'll
have
wait
about
for a
like
couple of minutes.
we have about 50 people on YouTube right now.
Perfect. Good evening, everyone. Okay, so probably you cannot reply to us. Yeah, so good evening. So we are Team Budding Analyst, and we are here for this webinar on portfolio management. So before we start, we'd like you all to see the video. Nikhil, can we have the video, please?
Can your goals have a limit? Can learning elevate your true
Nikhil, sorry to
potential?
interrupt. I think the
If
audio is
so,
not available.
how freely can you access it?
I'm sorry. You were saying something?
Yeah, I think the audio wasn't there for the video.
Okay. Okay. I don't know. Maybe there are some technical glitches then in that. Let's skip that for now then.
Okay. So we like to all will like to you all to know that what we are. So our basic purpose of budding analysts is to bridge the gap between budding professionals and their dream job and dream career. So we have this basic aim of spreading
Tanya,
financial literacy.
there are people commenting that the audio was there. So I guess we can
Okay,
go back and play it.
perfect. Okay. So yeah, you can play the video again.
Can your goals have a limit? Can learning elevate your true potential? If so, how freely can you access it? While you access and explore it, do you fare well in raising your bars? Do you choose to learn from the best? How would it be if you were guided and mentored by industry experts, trainers who are passionate for your success? Are you being empowered and learning the right skills? Are you learning beyond theory? Are you learning to lead?
Right.
Right. We hope you all liked the video. Before we start the session, this is a humble request. If you all have any questions, any query, anything you want to ask, suggest, or you want to interact, just put up that in the YouTube live chat box. So we'll take up the questions at the end or whenever we get time between the session. So, right, like I was mentioning before, the basic aim of budding analysts is to spread the importance of practical learning and break the stereotype of giving importance to theoretical learning, especially in the field of finance. So, we aim to bridge the gap between the professionals and their dream job and career. So, Budding Analyst is the next generation's go to platform to access curated content covering in depth analysis on a multitude of topics. So, we aim to foster a community of readers and analysts and try to spread literacy of varied disciplines through online courses and training programs. We'll
Right.
be, yeah. So, We basically offer five things broadly. One, we offer interactive webinars,
So just like you're
workshops,
attending right now.
right? And then we have workshops. These are customized workshop, depends upon different topics, different themes, and general workshops as well. And then we have online courses, live projects, and different blogs and different competitions. So we have, since we are on this topic of competition, we have this one competition live, which is Budding Analyst of the Year.
Right.
You
So
all
I'll
should
be
go
telling
and
them
check that
about
out.
that in the coming slides. I have a special
Yeah,
slide for that.
perfect, perfect. So I
Right.
think we can move on.
Right.
Right. Apart from the basic reason of choosing budding analysts, that we provide financial literacy and practical implications of various topics, and we provide live training sessions. Here are a few other main reasons why you should join and choose budding analyst. We have real time training programs with live training sessions. We have lifetime access to all the recorded sessions. So any video you see, any course you do which is live, you can also have its pre-recorded videos for the lifetime access. Then we have experienced industry professionals who come up and teach whatever topic you have enrolled for. And then if you talk about the numbers, we have over 2,000 students from 300 plus institutes. We have a dedicated team, so we actually understand the need of current need of the students, and then accordingly we curate we curate content, we curate the course structure, and then deliver it. Apart from that, we offer various discounts to various students depending upon what time frame you apply for, I think.
Right.
And apart from that, we have a few other benefits which we'll taking up in the further slides.
Right. So, as she mentioned about various benefits of why you should join Budding Analyst, so I'll just give you a glimpse about what our trainers come from. So, all the trainers for our webinars, workshops, training programs, and live projects, and any course that you enroll for. So, all the trainers for Budding Analyst, they are experienced professionals and have at least over 12 years of experience in equity research, portfolio management, credit appraisal, and investment advisory. And they're currently working as vice presidents, assistant vice presidents, and equivalent positions in various, financial services firms. So, and even banks and credit rating agencies and all. So if we even talk about the current programs that we have, so some of them are equity research, credit research, and specifically I would highlight portfolio construction and management because the webinar for today is related to that, and the registrations are going to close in the next 3-4 days, right? And the program is going to start on 15th of August. So that is why I'm emphasizing on that particular live project currently. And besides that, we also have courses on cryptocurrency and beginner's guide to investments, right? So all the details are available on our website, as you can see on the left hand side. It's www.buddinganalyst.com, right? And moreover, you can also enroll for a competition which is Budding Analyst of the Year, and it's a like 3-stage competition. It's a flagship competition in which you can participate with your friends in teams of 4. There's a cash prize of 25,000 in that, and over and above you can get other benefits which are over 1 lakh rupees. So you can check that out. I'll send a link for that in the email since you all have registered. So I'll be sending you emails regarding these things over the email, right? Moreover, if we talk about other benefits, like what are you eligible for while you enroll for this session? So the first thing is that you will be getting free knowledge sharing sessions by budding analysts in the times to come. Moreover, we are offering exclusive discounts to all the people who are available today on various courses, workshops, and live training programs. So the discount code would be sent to you via email, since we do not want to share the code to with everyone who's watching this live, and only for the people who have registered for this. So we'll be emailing you the discount code. And besides that, you can also get free demat account openings with reimbursement of annual maintenance charges with our broking partner, which is Motilal Oswal, right? So if you have any queries, any doubts, you can just drop a text in the chat box, and let's just continue. And let's before we start the session, I would just like to introduce the speaker for the session and the mentor for this amazing program on portfolio management, Mr. Divyansh Awasthi. So hi Divyansh.
Hello, Puneet.
Hi.
And hello all.
Hi everyone. So before I would like you to start the session, I would just like to talk about since you have been working in the industry for over 15 years and you have worked on the buy side investment analysis and research on developed, emerging, and frontier economies, and on fund vehicles like mutual funds and exchange traded funds. So you have a very diverse experience in the financial services industry. And currently, Mr. Divyansh is working as the co-founder of Investcon Market Intelligence. Also, he has previously worked with Frontera, Market Realist, and Morningstar, CRISIL, and AMS Learning Systems. So there is so much that I could have talked about him, but that would take an entire session. So to avoid that, I would just like to invite Mr. Divyansh, and he could take things forward.
Good evening, all. Divyansh Awasthi here, and thank you, Puneet, for the introduction to both your offerings as well as to myself. Uh, Before we start off with what we intend to talk about, I'll just give you a brief so that you know where I'm coming from. It's important to paint a picture so that you know what you're looking at. So I have over 15 years of experience in financial services and fintech firms. My core is investment research. I've had the opportunity to work both with India-based MNCs. The example is right there in front of you, CRISIL, which is India's largest rating agency. I was working in the research wing in the funds and fixed income division of CRISIL. Then you have Morningstar India, which is an overseas-based MNC. Morningstar is a Chicago-based Nasdaq-listed company, which started mutual fund research in the world back in 1984. There, I was working on investment consulting assignments and quantitative mutual fund research. After that, I got an opportunity to work with a couple of overseas fintech startups, US-based Market Realist and Singapore-based Frontera. I was a senior macroeconomic analyst at both of these firms. My primary function was top-down macroeconomic research and its impact on investments. Across these firms, I've written and published over 3,300 articles. You will find them online on the web. Most of them are free, some of them are paid. You will find some of my work having been published in publications that you'll be familiar with, things like the Economic Times, the Times of India, Business Standard, as well as one of my work having been published in the World Bank. So this is a brief of what I've done, my experience across these investment markets. My experience spans developed markets, primarily the US, Japan, and Western Europe. Emerging markets, primarily China, India, Mexico, and frontier markets, most of them based out of Africa, some out of Latin America. So I have a wide span of having worked on broader markets and asset classes like equity, fixed income, as well as fund vehicles listed on various exchanges around the world. Now, with that out of the way, let's get into what we intend to talk about. So if I can have the first slide, please. Yeah, thank you. One thing that I'd like to set out at the outset is that when we talk about any stream of finance, be it broad asset classes like equity, fixed income, foreign exchange, or the basic work that is involved in any of these areas, a lot of people tend to believe or expect that after the end of 3 sessions, 5 sessions, or 16, in case of the current course that we're talking about, they will end up becoming professionals in the area. That's not true. That cannot be true. And the reason is very simple. Let's talk about the topic today that we have, that is PCM, or Portfolio Construction and Management. When you work for portfolio construction and management, the first thing that you need to determine is where exactly do you fit in. If you're talking about a very large financial firm, there are 3 segments to it. That's the front end, the back end, and the mid office. So if you're working in the front office, you primarily have sales related responsibilities. You may have partial research responsibilities. Initially, when you start out as an analyst, you will not be put with sales responsibilities. That's a large responsibility that cannot be given to freshers or people with less than 2 years of experience. So you will probably be functioning in the mid office, where you function as a boat between the sales team of your organization and the people who work in the back end, who punch in all the data and information based on which you come up with interesting and inventive solutions for your clients. The reason you will never become a professional, regardless of the course you do at the end of it, is because all firms have a different way of functioning. They have their own methods, they have their own leanings, they have their own inclinations, they have their own focus areas. So once you get in there, you will get to learn the ropes. So the intent is not to make you a professional. The intent is to get you in line to think like a professional instead of being a student. So whether you're pursuing your final years of graduation, or whether you're in your first year of post-graduation or recently completed your post-graduation and want to upskill yourself, the idea is to make you aware of how things actually work in the real world and make you question things the way a professional would. You will become a professional only after experience. So just in terms of a course, even if you study from top tier universities or Ivy League universities around the world, that's not going to make you professional. That's going to make you professional ready. And that's the idea. So the idea is to ensure that your focus, your intent is that of a professional. When you walk into an interview, when you go into the first day of your job, you don't have a student-like mindset. You have a base professional-like mindset so that you can imbibe the most information that you can from your seniors at your firm, from your clients of your firm, and can be on fast-track progress as compared to your peers who still have a student-like mindset. Okay, we will be going beyond textbook. And the intent of the session is to tell you how and answer the question how, not answer the question what. What do I mean by that? What I mean is, if I were to spend the next 35 odd minutes in telling you what I'll be talking about in the course, A, it's redundant because you can read it, you can get in touch with budding analysts and they'll tell you what the course outline is. B, I'll not be making you informed about what you're trying to get out of this course or what I'm trying to deliver from this course. So even though in portions I will be talking about the question what will be talking about in PCM, my main intent would be to answer how. How am I going to deliver this course? So with that intent, let's begin. The first slide in front of you, and I would really, let you take benefit of all your senses. So you can read from the slide at your own time while I'm speaking. I'll keep on adding to whatever I feel is a professional bent or a manner in which a professional would think. Now, the idea, the first slide says, what is portfolio management? I feel most of you would have probably already gone through the text that's written over there. Here, the one thing that I'd like to add is that portfolio management is being used as an umbrella term. What do I mean by an umbrella term? What I mean is that when we talk about portfolio construction and management, it's an exceptionally wide area. And this slide gives you a sense of the wide area that we're talking about. So the idea is to portray it in a very simple manner, but the intent is to ensure that you understand the span that we're talking about. We're talking about a potential client who has money to invest, does not know where to, how to invest, comes to your firm and asks you, what am I supposed to do? and you're trying to tell that person, we have a portfolio construction and management facility. I'm the representative of my team, and I'll be helping you out with your construction, and I'll be taking care of the management of your portfolio. So we're talking about an entire life cycle of somebody putting or her hard-earned money earns.
Divyansh, your voice is breaking. Hello?
Yeah, is it better now?
Yeah, Divyansh is fine.
Sure. So can we move on to the next slide, please? All right. You have very well I'll give you.
Divyansh, I guess there are some disturbances in the audio from your side.
Uh,
No, Divyansh, it's still there.
okay. Tried all methods of connection. Uh, and my connection seems fine. There doesn't seem to be any issue with my connection.
It's okay. I guess we can try now. It seems fine.
Okay, let me give it my original mode of communication another try. Okay, am I audible?
Yes, Divyansh, you're audible.
Okay, sure. Now, why is portfolio construction or management needed by an investment firm? Apart from the simple answer that people seek to have a portfolio solution for themselves, the idea is to have a structured method to approach investments. Now, as an analyst, especially if you work in the front office, you'll have a dual responsibility. Not only would you be working on Excel sheets and making projections and working on maybe stocks or maybe fund vehicles, depending on your interest, you'd also have the responsibility with interacting with clients who will not understand or be interested in what your research says. All they want is their money to be invested in the right avenues so that their investment earns money. Now, with this, because of this dual responsibility, what you need to ensure in your own mind, even before you begin your research, that there's a structure or a methodological approach to investment that you already have. And that is what we'll be discussing during the course once we start and go ahead with it. So the need for portfolio management that's there in front of you is something that you can pitch to your clients. But the need of portfolio management for you as an analyst is that there is a structure which you can follow. There is a method to the madness. If you don't have a structure, there is no way your investment or your suggested investment will yield returns. And that's the need for portfolio management. Can you go on to the next one, please? All right. Now, these are broad areas, or as I would want to call them, steps of getting into portfolio management. Now, you have a client who's come in, the client has $100 million to invest and wants you to give him or her an effective solution for constructing his portfolio. With that thing in mind, the first thing that you're going to look at is, okay, I have a structure for PCM in my mind. Whether the client comes in with 1,000 rupees or $100 million, I know the steps that I need to follow, where as I can provide them the most effective solution. There are solutions for everyone. You need as little as maybe 200 rupees for some fund houses and fund providers to invest in their fund. So somebody with 1,000 rupees will have the same broad structure of PCM as somebody who's coming in with $100 million. The idea is the differentiation between how you'd invest 1,000 rupees and the suggestions that you'd have for $100 million. And these three areas are the same regardless. So even the person coming in with 1,000 rupees needs to diversify his money. So does a person with $100 million. You need to allocate assets. There is no way you can invest all 1,000 rupees in a particular asset class or one particular stock or one particular bond. And you need to rebalance, by which I mean periodic review, and then seeing whether the investment composition still works. If it doesn't, we rebalance. If it does, we keep going strong. So once you have a structure, as shown in the previous slide, and once you have the steps which are common across your clients, you move on to the next slide. Sure. Now, simple enough. You can go through the benefits that have been outlined there. Technically, what we call this in the industry is the expected outcomes. So when a client comes to you, he's giving you the check, you have the money. Now, what the benefits that are in front of you is something that you can explain to your client for simplicity, for a manner in which that person understands. Why should he come to you? Why should he invest with you? What are the benefits that you're giving him that he'll probably not have with other vendors? You can talk about capital appreciation in terms of the past performance of your suggested calls or your portfolios. Something we know as model portfolios. All investment firms have their own model portfolios that they pitch to their clients that, in the last 1 year, these are the funds or these are the stocks that we suggested to our clients. And this is the way our portfolio has performed. That's known as a model portfolio. Then maximizing returns on investment, something that the client wishes, regardless of the money that he's putting up on the table. Risk optimization, there a lot of understanding of risk comes in. Risk optimization comes from two perspectives. One is the understanding of the risk from the client side, and the second is the modeling of the risk in investment portfolio so that you can have an efficient investment for that client, and then that client does not need to call you up each and every time there's an adverse market movement. The client understands the risks that are involved in investing in the particular asset classes for which the solution has been provided to them. Then allocating resources optimally, already touched upon in the previous slide in terms of asset allocation, and ensuring flexibility of portfolio. That's the dynamicity which depends pretty much on the client. The idea is for you as an analyst, once the client goes away, these are the expected outcomes from you. What do you need to do in order to ensure that the benefits that you suggested to the client are actually provided to that particular client? I'll give an example here. Before Interstellar came out, the movie Interstellar, people had limited understanding of black holes. If anything, black holes would be considered to be a part of a joke, except for people who had a physics background or an astronomy background and interest. But Interstellar brought the complex idea of black holes to dinner table conversations. People who went out of the theater or watched it on streaming or on a DVD came out amazed by that concept. People who actually understand the concept, the origination, the idea of black holes, they would understand the complexity that would have gone behind simplifying the idea of black holes in a commercially successful movie. That's a very difficult task. That is something similar that you need to do for your client. Portfolio construction and management, as I'll soon touch upon later in this presentation, can be as complex for you as an analyst as you can expect anything to be. But for the client, it needs to be as simple as a slide that has been laid out in front of you. Because if you go ahead with the complexity of trying to explain black holes to somebody who's a commerce student out of school, just got into the university, that student will lose interest and move on. In order to be a good analyst, it's important to understand that you know and are aware of the complexities that are involved in your work so that you can make it simple for your clients, simple enough to have confidence in you and invest money with you for your firm. Please move on to the next slide. Now, very, very simply laid out steps in front of you, which you can read as I speak. The idea of portfolio construction and management and the steps that are represented in the slide is to outline the process. So you may have remembered that in the second slide, I told you guys that the idea is to give a structure for both you as an analyst and if you have a dual capacity of interacting with clients, to tell them how are you going to go about it. That's the first step to doing anything, providing structure. In the third slide, we had talked about the broad steps, regardless of the client's portfolio size or ticket size, as we call it, the steps which are involved in the entire process. Then we talked about expected outcomes. From both perspectives, the expected outcomes in terms of what you'll explain to a client and what you need to do as an analyst. And now we're here in terms of outlining the process. What does the entire process to which we provided a structure involve? And these steps are quite dynamic in nature. So, for example, step 3 says determine asset allocation. Now, when you talk about determining asset allocation for somebody who has a relatively small ticket size, by which I mean a small amount to invest, you have a relatively simple task on your hands. With 1,000 rupees, there's a limited room for you to invest in a diverse array of stocks. You need to buy stocks in complete units. You cannot buy stocks in portions or fractions. So for that, you have very limited ability to suggest 3 stocks that that person can invest those 1,000 rupees into. You have a simple solution. Let's go to mutual funds. Let's go to a fund which provides this person access to the fixed income markets, provides this person access to the stock markets. Let's talk to this person. Let's see what this person's risk levels are and suggest accordingly. If the person is a risk lover, if the person is young, if the person does not need the money for the next 5 years, you have categories like large cap funds, mid cap funds, and small cap funds where you can invest. If the person is nearing his 40s, needs the money in the next 5 years, you've got several categories in a broad category class known as hybrid mutual funds. So you have dynamic asset allocation funds, you have aggressive hybrid funds, and you have moderate hybrid funds. And if that person is about to retire in the next 3-4 years, is not very certain when he'll need the money, but he's sure that he'll need the money in 3 years or less, you have options, a plethora of options in the fixed income category. You have arbitrage funds, and you have conservative hybrid funds that you can suggest to the client. On the other hand, if you have somebody with a large ticket size, somebody who's coming in with 25 lakh rupees or 50 lakh rupees, the step 3 would be much more detailed than I explained to you. So this is where the dynamicity of portfolio construction comes into play. I just told you what, the detail that is involved in one step. I did not talk about the assessment of the client, did not talk about goals, did not talk about measuring and rebalancing, just asset allocation. And this is the difference in thinking that is involved in terms of asset allocation just for 2 different clients. And this is something we will be talking about during the course. As I said, please remember, I'm trying to tell you how I'm going to go about the course, not necessarily or not predominantly what I'll be talking about in the course. Okay, can we move on to the next slide, please? Thank you. Now, portfolio construction basics. Here, we are talking about the different aspects that are related to portfolio construction and management. Depending on the size of the firm that you join in, if it's a relatively small firm, you'll probably be doing all or taking care of all these aspects yourself with maybe a team of 3-4 people. If you're talking about a mega investment house, you're probably going to be part of a team of one of these units. So if you end up becoming interested in the risk management aspect of investment, you have this segment of risk assessment and profiling. You'll be working in the mid office. You'll not be working in the front office. The front office people will meet the client, come back with the requirements, and tell you that this person has X amount of ability of taking risk, has this experience with investing, wants to invest only in domestic stocks, does not want to invest in overseas stocks, and wants to be very limited with his equity exposure. Now, with this input, it's your responsibility to provide a portfolio and tell your front office team of what will be the effective solution for this person's interest and requirement. The similar thing goes with understanding client requirement. If you're talking about a mega house and you're working in the front office, you're not responsible for risk management. All you need to do is go out, meet clients, understand requirements in a technical manner as well for you as an analyst, not just that this person wants 12% returns and does not want to invest in equities and wants the money in 3 years. This is a near impossible requirement. It's very, very hard to get 12% return when you don't want to invest in equities and you want to exit the market in 3 years. So a technical understanding of feasible client needs and suggesting solutions upfront so that you seem across somebody as knowledgeable or understandable of their field is something that will be required from you if you work in a front office in a mega investment house. And goal-based comprehensive portfolio construction, this is as technical as risk assessment and profiling and creating risk barriers to the investment portfolio. This is the meat of the portfolio construction process, and we'll be dedicating a lot of time and some technicals in order for you to have a professional view of this. I'll also give you an example here. For instance, you guys would be very well aware of the monetary policy that the Reserve Bank releases. We had a release very, very recently. If I were to just ask you, we are not on an interactive platform, so you can't answer. But if I were to just ask you, what is your view on the equity markets given the inflation assessment that the RBI has given? Or how do you read the Monetary Policy Committee's view on enhancing its inflation target? What does that mean to you as an analyst? These are the things that we'll be talking about when we conduct the course. So that once you're sitting for an interview, it shouldn't be that you're stiff. What do I mean by stiff? When somebody goes for a job interview, regardless of whether they are still a student or whether they have less than 2 or 3 years of experience, they appear to be stiff because their understanding is theoretical. They'll probably be ready to talk about what inflation means or what inflation does to an economy the way they've read in a textbook or in a presentation, but they'll probably be not as ready if this kind of question, the question that I just posed to you guys a few minutes ago, is posed to them. Once people start asking you for your views, those views are made only when you have a professional bent, when you know as an analyst the right questions to ask. Until that time, you're a student who can answer definitions, who can provide numbers. You probably will know how inflation has moved in the past 12 months or in the past 16, 17 odd month period that we've been locked in our homes. But if I were to ask you, what does that mean? Or has India experienced this before? Or what do you expect this to have an impact on the equity markets or the fixed income markets? you'd probably become a bit more stiff. You'll have an answer, you'll probably mumble something, but is it correct or not is something that you'll probably not know. And that is what we'll be talking about in this course. So that once you step out, whether it's for an interview or just an analyst discussion, you come across as somebody who's informed, not somebody who knows everything. Nobody does. I don't. Many people who are much more senior to me don't. But they do know how to ask the right questions. And once you do know how to ask the right questions, many large investment firms that you dream of getting employed into or working for sometime in the future will be very interested in you. When corporates say that they don't get the right people, what they mean is it's not that those people are bad or those people don't know their things. What those people don't have is the ability to ask the right questions the way a professional would. And that would be my intent as I take you through this course. Can we move on to the next slide, please? Now, here we have certain types of portfolio management that we're talking about. I would like to call them different methods of portfolio management. And I'll also give you a small example here. For instance, I'm quite sure some of the members of the audience, they would know what passive and active portfolio management is. We would not be tackling that. If I were to just define this right here, you can go on online platforms across, you can go to Investopedia and know what passive and active portfolio management is. That's not the idea. My idea is to tell you, once I am delivering the course, my idea is to tell you where to use passive portfolio management and in what scenarios active portfolio management makes sense. What is the success of active portfolio management, drawbacks of active portfolio management, and what clients are you looking for when you suggest to them passive portfolio management instead of an active one. People may come to you asking for active portfolio management. They may not be ready. How to know that? How to determine that this person has more of a passive portfolio solution, more effective for this individual than an active solution. And that's something that we'll be talking about in the course. Can we move on to the next one, please? Okay. Now, what would a webinar on portfolio construction and management be without some technicals? If I wouldn't do this, you guys would say this is all theoretical. So I gave in some practicality to it. Now, this is not made by me. This is sourced to Miss Cullen. I've taken it from her research paper, and whatever I'll talk about in the next slide as well, I have provided sources there. So this is a fairly standard assessment of what a global asset portfolio should look like. This is primarily for US clients, and I presented it to you so that you guys get an idea of when you're talking about, hey, you know what, I need a practical approach. I need something to practice on. I need something that's done in the real world. Well, this is as real as it gets. So when we're talking about government bonds and non-government bonds, we're primarily talking about corporate bonds or investment grade corporate bonds, IG corporate bonds. Then you have high yield bonds, something that's not really known in the Indian universe. In fact, for that matter, even the non-government bonds, or what I just told you as investment grade corporate bonds, we have a very shallow market in India for that. The government bond market dominates the fixed income markets in the Indian spectrum. That is why I had to take an example which comes from a developed market. So some of you would start getting an idea, yeah, I'm able to understand this. We have 35% in equities. We have got some exposure to emerging market bonds, less than 5%. Then we have a substantial portfolio in government bonds. What can you gauge from that? If I were to just present this to you, that somebody has come in, some research paper has come in, and they have said, this is what a well-diversified portfolio looks like. For that matter, there's this term on the upper end of the graph known as TIPS. Those are treasury inflation protected securities. So these are inflation protection bonds. TIPS is not specific to the US. It is available all around the world. But this portfolio being focused on the US, this refers to US TIPS securities. But what can you make out of it? Seems technical, seems very cool. What do you make out of it? What I make out of it is this is for somebody who's a relatively conservative investor, who does not have a particular affinity to a certain asset class, who has relatively limited ability to take risk, and probably needs the money in the near future, or is not desirous of having a very high volatility, wants the best for his portfolio, but does not want very high volatility. How do I come to access that? Is something that you know in the course. Can we move on to the next one, please? Okay, this is just for fun. For people who expect technical delivery, technicals who are very keen on understanding the technicals, you want portfolio construction to be technical, this is as technical as it can get. Not the most technical thing you'll find, but this is as technical as it can get. The sources are given right there, Investco and Barra. When you are looking at various portfolio construction methods, what are the inputs required, and what is the formula that is required to construct that portfolio? So the idea is to ensure that you don't get lost in the idea of having technical knowledge. You should be looking for practical knowledge. Your job as an analyst will be to provide effective, simple explanations for your clients, and having the technical know-how on how to go about it. So the previous slide was a much simpler explanation of the way a portfolio can look like. This is a more technical one. Neither is right or wrong. The idea is, do you know how to read and effectively understand what that means? And that is what the intent will be in terms of what I'll try to deliver. I'll ask you a question. And please comment whatever you can, because we are not interacting, so I can't answer this live. Could you tell me, if you had securities which had similar risk levels, let's forget the risk levels for now. They have similar risk levels. We don't need to compare them on the risk category. One is giving 32% returns over a 6-month period. The other is giving 12% returns on a 2-year period. Which one would you recommend to your client? Do answer whatever you can in your comments, and I'll leave you with another question. There are 2 funds. Right now, the question that I posed to you had returns of different time frames. One was over 6 months, the other was over 2 years. The second question is where I equalize the time frame. The return period is 1 year. One security is returning 6%. The other security is returning 9.5%. Which one would you recommend? And just to answer, there is no correct answer here, because without risk, returns are meaningless. The first could be a bond, which is giving 6% returns. The 9.5% could be a mid-cap stock. So the idea is to ensure, and I would have loved to interact with you guys on this one before answering, but since I don't have an option here, the idea is to ensure that if somebody asks you a question like this in an interview, you're aware of what to answer. The answer is none of the above. Because please tell me the risk. Before I know the risk, I cannot answer on the basis of return. And the former one is a more of a quantitative driven question. Which one is better when we're talking about same risk levels? So do answer whatever you can. This is as technical as it can possibly get. My intention is not to go this technical. The idea was to just show you that if you want technicals, this is the level of which technicality is being. Yeah, is to understand the formula. That will be my intent through the length of this course. Me, if you have any questions from me,
Divyansh,
please
your
don't
voice
in the
was
comment
breaking
section.
towards the end, like for the last 1 minute, for
Over to you.
the last few seconds. Divyansh, are you there? Okay, guys. So I hope you liked the webinar today, and just a question from my side: how many of you aspire to be equity research analysts or credit research analysts or portfolio managers in the times to come? Just write yes in the chat box. I just want to see that. Just write yes if you aspire to be in the work in the financial services industry in the coming years. I hope most of you are B school students. Right. So, if you aspire to be, equity research analyst or credit research analyst or a portfolio manager in the times to come, or even, for various other profiles, so you can register for our training programs. And specifically, if we talk about like portfolio management, so as you just saw the glimpse of Mr. Divyansh Awasthi, who is going to be the mentor for portfolio management, and I've mentioned the code, which is early bird, and that can give you a 50% off on the registration fee. This is applicable just for the next few days, and the training program is going to start from 15th of August. So you can visit the website, which is www.buddinganalyst.com/live. So you can visit that link, and I'll also email the link to you guys, and you can just check that out and let us know. Our WhatsApp chat supports number is in the comment box. I'll also email you all the details, so you can come back to us, ask for the course outline or any queries that you have, and we would love to help you guys. And we just want you guys to get good jobs in the future, and in any way that we could help you out. So we are providing various free webinars in the times to come, and various such webinars as we provided today, and various training sessions and free and paid content and various things from budding analysts, right? So we are dedicated to teach you, to train you, to be ready for working in the field for your dream jobs, right? So I hope you liked the session. Just subscribe if you felt that the session was useful. If you loved it, just subscribe so that you can attend to more such webinars and such videos in times to come. And also, yeah, do let us know if you're interested in joining the course, and we'll get back to you soon. So if you have any further questions that you would like to ask to your mentor, please put them in the chat box, and we can take them up in the next 5 minutes, or else we'll be winding up. So I hope, and any feedback if you want, so you can also share the feedback in the comments. I can see a lot of people saying yes to enter the financial services industry, which is a great thing. We need people who are enthusiastic and ambitious to work in the financial service industry, right? So more people are commenting yes, so that's a great thing. So let's just see if we have any questions, or we'll just wind up the session. Great. So I guess there are no more questions in the chat box. So there was just one question which I answered in the comments itself. And yeah, for any further queries, I have mentioned our WhatsApp chat support number. Our email is official@buddinganalyst.com. And yes, we'll be sending you an email in which you can reply to us, and we can take things forward. So thank you everyone for attending the session. Thank you, Divyansh. Thank you so much for being here and helping us and guiding the students on portfolio management. And yeah, take care, everyone. Let's end the session.